Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. Today, of course, we'll be talking about currency options, ISE FX Options, and I'm pleased that we have Pro Market Advisors with us. Pro Market Advisors is an education, training, and consulting firm that caters to the individual trader and investor, as well as corporate managers and executives regarding their retirement plans, stock options, and ESOP plans. So what they really do, guys, is they offer education. You could see them at OIC events, whether it's Costa Mesa, California, New Brunswick, New Jersey, and there will be other events throughout 2011. They also have an affiliation with Broker E-Trade, so you can check them out there. So without further ado, I want to introduce both Rick and Shawn. Guys, thank you so much for joining us here at the ISE. Really appreciate it.
Thanks, Steve. Always happy to be on.
Absolutely. We appreciate you having us on, and want to extend our welcome to everyone for joining us today. Steve and Shawn and I have worked together for, gosh, it's safe to say many years now, isn't it, Steve?
Yes, it is. It has been.
It's great, though. It's been a long time, and we do appreciate our partnership with ICE. And we're just going to take just a brief minute just to let you know who we are, but we don't want to spend a lot of time on that because we do have a lot that we want to cover today. I'm Rick Swope with Pro Market Advisors. My partner, Shawn, Howell's on the call with me, and what we want to talk about today is something that we are using a lot in this market right now, and that is reversal patterns, because we see that happening a lot whenever you start hitting market peaks, market bottoms, or channeling markets. And we've seen a lot of market stocks, ETFs, currencies that are channeling right now, and you can use these particular patterns while they're channeling and also as they start to move into a new trend. So this is a topic. It's a lot of fun for us. But Shawn and I have taught throughout the country in a lot of different venues, and we're real happy to be a part of this. Shawn, if you want to just maybe do just kind of a quick background on yourself, and then we'll jump into the slides.
Well, you know, there's no such thing as a quick background, but I will try to summarize it very quickly. I was a broker for many years. I've been a day trader. I've been a very active option trader, and then I started to do more one-on-one instructing and more group instructing, and I eventually went to work as an executive for an educational firm. And education out there is not always the most inexpensive thing that you can get, but we think it's money well spent as far as you're managing your money here. So education is definitely going to be an investment that's going to be paying some kind of a dividend down the road. So Rick and I created Pro Market Advisors. Take a look at our website. As you can see, we do a lot of education focused around options and technical analysis, and even a little bit of fundamental analysis as well. And one of the things that I really enjoyed doing with Steve and with the ICE is that we're really looking at very technical markets right now. And after Rick and I go through the slides, I'd be happy to go through maybe some strategy, how you can turn off some of the emotions and just start to trade purely on technicals and use some option strategies as well. And the one I'm hoping we'll have time to talk about today is an iron condor. So definitely have your slide up. We're going to be doing it on the yen pair, so it's $YUK, or it might just be YUK depending on what charting platform you're using. So Rick, heads up to you. That's the one I'm going to be taking a look at after we're done. But let's get rolling through the slides so we can get to the strategy.
Yeah, and while Shawn was doing that quick intro, I also left the slide up here that you guys have been taking a look at and give you a moment to read that. So this will be in the archive and the recording also, but I do want to encourage you to take a look at the publication entitled Characteristics and Risks of Standardized Option. That's available through your broker. So take a look at that. Now what we're going to do today is we're actually going to do kind of a two-part, and the first part, what we're going to do is a little bit more instructional. We're going to walk through some definitions, lay the foundation, and then in the second part, we're going to actually move to live charts, because we want to take the things that we learn in the foundation and the definition part, we want to put them into practice. So kind of split this into two parts. Think of it as classroom lecture and then lab, if you will. But we're going to look at some live charts. So with that, let's look at, and we're going to come back to this, by the way. This is the list of the current FX option trading symbols, and you'll notice that these are U.S. dollar denominated. So just in just basic format, if you're not familiar with this, as you look at the chart of these currency pairs, then if the chart is moving up, that shows strength on the U.S. dollar. So important that you understand that. So for instance, on the YUK, the yen-U.S. dollar pair that Shawn was just mentioning, on some platforms that might be listed as $YUK. Different platforms may have some different symbology for entering in the currency pair. But when you look at that, when you look at YUK, if the chart is moving up, that just simply means that the U.S. dollar is strengthening against the yen. Of course, if it's going down, the yen would be strengthening against the dollar. We'll take a look at that in more detail. But let's start with some basics. Now, this might be seem like a little too basic, especially if you've been in the markets for a while. But you know, our approach to this is it's always good to come back to the bread and butter. The markets, if you get any kind of trading publications, I don't know how many of you attend things like the traders conventions that they have in New York and Vegas and some other places around. If you've ever been a part of those, if you've ever participated in those, you know that the propensity is to make things as complicated as humanly possible. And let's be honest, part of the reason for that is because if you're confused, there's a real good chance that you'll you'll continue to buy stuff that will help try to unwind that confusion. Well, there's a lot of good material out there, but the fact of the matter is you want to make sure you keep coming back to your foundation. And quite honestly, the foundation should be and is pretty simple. So we're not going to spend a lot of time on this, but let's jump into it. Why charts? Charts are the primary tool of technical analysis. Everything that we look at starts with the chart. Every strategy that we work with is predicated on what's going on with the underlying. So, you know, we can look at the option chain for a currency pair, and we can look at the Greeks, and we can look at the intrinsic value and volatility. We could look at all that. But if we have not gleaned a basic understanding of what's going on in the chart on that currency pair, then we're really flying blind. So first and foremost, this is where we're going to start, is charts are the primary tool of technical analysis. That's our starting point. And the reason we're going to be looking at this, the reason we go into the picture rather than the numbers first, is very simply, we're built in such a way that we'll pick out patterns in charts long before the technical indicators will pop out the numbers. You know, I'm a big fan of confirmation through analysis, but I'm not a big fan of stepping into analysis first. You know, I use some advice that I was given back in grad school many years ago, and that is when you're given some data, the first thing you should do is put it on a chart, take 2 steps back, and let the data talk to you. That means we don't come in with preconceived notions. We don't come in and try to force the data, force the picture into what our favorite technical indicator du jour is telling us. You know, I had a guy come up to me one time and he says, you know, if I didn't have Fibonacci retracements, I couldn't trade. And I'm thinking, well, that's a shame, because while they have a place in certain types of retracement analysis, it's not the end-all be-all, but that's what he had made it into. So what I like to do, what our approach is look at the picture first. Find out what the story is that's coming out of the charts, and then step into the technical indicators to help either confirm or invalidate the initial picture. You know, if you've got a conflict between your quantitative analysis and your chart picture, then you've got to reconcile that before you move on. And if you can't, well, you know, what we say is, you know, you got about a dozen currency pairs and thousands of stocks and ETFs. Don't force a square peg into a round hole. You know, I've used a lot of cliches, but you know, sometimes cliches are the best way to communicate the idea. And finally on this, charts are analog, technical indicators are digital, and that's just another way of saying a picture's worth 1,000 words. Hey, Shawn, I'm going to go through a couple of these slides up front here, but obviously I know you're going to be spending more time when we get to the analysis part, but at any point in time, if you want to interrupt me and jump in, don't hesitate.
Yeah, well, let me jump in real quick and say, while Rick's going through this, if you want to throw some questions up in the Q&A, I got fingers, I can type away, I can respond to some. But, one of the things that I really enjoy about charts is it really saves me time and saves me some stress. And let me give you an example here. I'm in California, and Rick, you're East Coast, so getting up for the stock market for you is no big deal at all. You're up already. But getting up at 6:10, 6:15 in the morning for me to kind of prepare for the day's trading, that can be a little bit painful here. Well, as you know, I go for a walk with my dad, and so Dad and I woke up early this morning to take a look and find out how Apple was going to open. Mostly for curiosity. You've probably all seen the news. Steve Jobs is going to take a leave of absence due to medical situation, but also they're releasing their earnings. So it's very interestingly timed. So I'm going for a walk with my dad this morning, and he brings it up. My dad's not a big trader. My mom's more of an investor, and he said, your mother's investment club is going to buy some more Apple. How do you think this news is going to affect the Apple? And I said to Dad, now that I'm away from my charts, I said, Dad, I don't know. It's either going to be good or it's going to be bad, but I don't know how it's going to affect. What I would turn to is I would turn to my charts, because my opinion about the news of how the earnings announcements are going to be interpreted and how Steve Jobs taking this leave of absence is going to be interpreted is really very secondary to my trading. My trading is going to be determined by, as what Rick's got up here, what are the footprints in the sand? What is the big money doing? Do they think that this leave of absence is so terrible that they've decided that they no longer want to buy Apple or own it, therefore they're pushing the sell button? If that happens with the big traders out there, the price is going to go down, regardless of my opinion being good, bad, or indifferent. So I have to wait until there's some footprints in the sand before I know which way this person is walking. And that's really what Rick and I are going to be looking at now. Which direction are the footprints going? That's the direction that we need to go, and we need to follow the big money, the smart money that determines the next direction of the stock, not what we think should happen. So looking at charts allows me to turn off news and turn off my emotion. Therefore, it reduces my level of stress as far as making a decision. Rick, I'll pass it back to you.
Yeah, I appreciate you interjecting that, Shawn, because that actually does emphasize a very important point that as we go in looking at these different patterns. And, Shawn reaffirmed it here, what I said earlier, and that is let the data talk to you. See, one of the most dangerous things you could do is come into an analysis with an expectation or a predisposition in what you think is going to happen. If you read the news on Apple and you try to make heads or tails of a direction on that. Now, I'm not saying you don't try to incorporate fundamentals and be smart in terms of what's going on, but what I'm saying is if you look at that and you have yourself convinced that Apple's going down, you can use let me put it this way, you will find what you're expecting out of the charts.
Fully agree.
So, give you an example. We use this, it's the footprints in the sand of trading. It's just another way of saying which way are the traders running. Now, if before you ever look at the footprints, you are just convinced that the traders are going to be running one direction, then it's almost assured that as soon as you look at those footprints, you will find reasons to think that they're going in your direction.
No, you think they're running backwards sometimes. Sure, the toes are going this way, but you go, no, this is just someone who's running backwards to work on his quads. That's what you'll say to yourself. We see it all the time. People, it's got to go down. It can't keep going up. Then, okay, wait till it goes down before you take that trade. And something else that's nice about looking at currencies as well is currencies do not fluctuate based on a guy like Steve Jobs getting sick or not. They just don't. They fluctuate based on very big macroeconomic things. Gross domestic product, jobless claims, what their federal banks are doing, what their central banks are doing. Are they raising interest rates or are they lowering interest rates? And these things happen over months and quarters. They don't happen like, hey, Verizon and AT&T Verizon and Apple just decided they're going to release a Apple iPhone. It's not something like that. So what's nice about using technical analysis and currency trends is that they tend to trend for quite a long time. They don't flip back and forth and back and forth. So you should have more opportunity to see reversal patterns as they begin to develop and then follow through or don't follow through.
That's right. Important point here as part of risk management, they give clues but do not predict the future. And this is just a simple principle that we really operate by, and that is, if you ask me where something is going to go, I'll give you my best guess, but I will also put the caveat in there. But when I'm wrong or if I'm wrong, here is how I'm going to protect myself. Now, we're not going to go into a lot of detail on that except to say that as we go through the analysis, we are going to identify risk points. So important to keep in mind that they're not crystal balls. Again, help identify trend continuations and trend reversals. Now we're going to focus primarily on trend reversals, but the other hand there is trend continuations. That's maybe Steve. Maybe we do that for the next time. We'll do reversals one time, continuations another time. So maybe we'll chat about that, and maybe that could be a part two.
That's a great idea.
Yeah. And by the way, there's probably just as many and as robust continuation patterns that we can look at, and they're all good to have in your toolkit as you're doing your chart analysis. They help you identify targets. You know, part of risk management is deciding whether or not the risk is worth the reward, or the reward is worth the risk, rather. So we'll include that also a little bit in our discussion today. And then finally, this is just another way to say keep it simple. The more arcane, the less robust.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX Options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.